All right, good afternoon, ladies and gentlemen. May I request all of you to take your seats? I know it's been a while since we've all gathered in a room like this, but one of the old rules still applies. Please put your phones on silent. Avoid your phones ringing during the event. Good afternoon. Welcome to the Kotak 811 Investor Meet. My name is Suresh Venkat. I have the privilege of being your host for the event. Now, in keeping with the spirit of the times, today's event will be a phygital event with both a physical presence, as you can see all of you in this room, and a digital presence. We are joined by a huge contingent online. It's nice to meet in person. And we also have a large contingent of people who are joining via video conference. So, welcome to all of you who are joining from various locations around the world via video conferencing. So, welcome both physical guests and virtual guests. Today, we will hear from Mr. Uday Kotak, Ms. Shanti Ekambram, Mr. Manish Agarwal, and Jay Kotak. And if you have questions for them, and by that I mean both people in the room and people attending virtually, we'll be happy to take your questions in the latter half of the event. So put down your questions and keep them ready. For those of you joining us virtually, please do send your questions on the Q&A tab on your video conferencing app. It goes without saying that we request you to keep your questions related to the 811 business. Our keynote speaker, Mr. Uday Kotak, is the founder, MD, and CEO of Kotak Mahindra Bank, which has a consolidated net worth of more than $10 billion and employs more than 70,000 people. He's also the former president of CI, co-chairman of the Indo-UK Financial Partnership, and erstwhile non-executive chairman of the Special IL&FS Board. Mr. Kotak, may I request you to address this August gathering?
Good afternoon, friends, both in person and, of course, from across the world. 5 years ago, we had a meeting on 29th of March 2017, for which we actually had called a press conference to announce the launch of 811. And we had kept the purpose of the conference confidential. And for some of who you may recollect, it had created wild and unexpected speculation. Therefore, keeping in mind this fact, we this time decided to announce in advance that the purpose of the meeting was to report back 5 years later. Some of the promises which we've made were much more short-term, but also what has happened to this whole concept of 811 as it was announced. Many of you may be aware that the name 811 came from the date 8th November 2016. And that was the date on which India dramatically changed its destiny, at least in terms of how customers and consumers dealt with in the present and the future. So the purpose of today's meeting is to really share the progress and also significantly into not just what's relevant for us at Kotak, but also customer behavior changes. Very often I'm asked a question, is the future of banking and finance physical, digital, how has it changed? And my answer is that the future of banking and finance still remains the real world customer. The real world customer is changing his, her, and her behavior. And what we must do is to anticipate and follow the changes in customer behavior in terms of how we shape ourselves. And therefore, the future of finance is and will continue to be a real world customer and the way that customer's behavior changes. And here I'm tempted to share a reality of late 19th century, early 20th century. Many of you are aware of the famous transportation industry. And in the late 19th century, all the way till the early 20th century, the name of the game was horses and horse carts. And the entire growth of transportation worldwide was more horses. And therefore, there were many, many businesses which spawned around horses and horse carts around the world. And then there was this so-called innovation, by the way, which was supposed to be an anti-pollution device then, called the automobile. And the automobile led to change in behavior. In the early stages, the adoption of the automobile was slow. Customers took their time. But at some point of time in the early 20th century, it took off. However, the use of horses continued for a while. Many of you may be aware that the World War I was fought on horses. There were no cars. Even in World War II, the entire movement of materials and transportation of supplies continued on horses, though planes and automobiles were very much a part of the war. So the decline of the horse towards the car in consumer behavior happened gradually at first and then really speeded up. But some of the stuff continued even for a long time beyond the 1910s and 1915s. So when I think about banking and finance and the change of the customer behavior, I can see a lot of our businesses continue to be what I call as the business of horses. But there are many of our businesses which are transforming, underlay below that, into the business of cars. And some of them are speeding up. A lot of the money is made, even now, in many parts of banking, out of, again, to draw a parallel, the business of horses. But we have to really leverage this period because the cars have come. The customer is far more comfortable with the car. Talk to any consumer, how much of his or her transactions have moved to online and mobile. And it tells you that the change is underway. And while some of the horses businesses will continue to make money, how are we adapting a mindset change and a real world change? Because that's where the customer is. So it is with this background, friends, that I feel extremely vindicated, at the same time continue to be challenged 5 years later about how we look at the future. Talking specifically about 811, it's a very simple thing. It is essentially an online account opening. An account opens in about 3 odd minutes, anywhere in India, 24/7. One of the other features which we have got from day one and which we have continued is no requirement of minimum balance. So a customer can open an account at will, does not have any requirement of minimum balance. And the third change which we made then and which we have held on is the importance of unbundling of services. Banks are famous and notorious for bundling of services. So what we have tried to do with 811 is the basic account is an account without need for minimum balance. It has an embedded digital virtual card. Everything else is unbundled and available for that customer at the customer's choice, both in the physical and the digital world. It is the option of the customer. If a customer wants to go into a branch and deal and withdraw cash or do a transaction, that is also possible for this customer. But for every one of these, like it is unbundled, there's an appropriate charge for it. And we are quite amazed that customers are willing to pay for use. And we're going to share some of the data about how this customer cohort is behaving. And what we are finding most interesting is one would normally assume that this customer base is young, upwardly mobile, mass. All that is true. But there is a desire for even the older generation to get much ahead in terms of being mobile savvy. So 811 is not the only thing which happens in the bank, that let me assure you that. But in many ways, for us, it's an harbinger of bringing change across the rest of the bank as well, because mindset change is always the bigger challenge than the physical world change. And finally, what the team will make the presentation to you today. There are 3 people making the presentation. 2 out of the 3 were with me when we made the presentation in March 2017. One was Shanti Ekambram, who heads the consumer bank and who has recently been announced to be appointed on the board as a whole-time director of the bank. Along with Shanti is a gentleman called Manish Agarwal. Where's Manish? Yeah. Manish has been driving this 811 business and the project from 2017 March. And the third addition is Uday Kotak, who happens to be my son. And the history of Jai is he joined the consumer bank about 3 years ago as executive assistant to Shanti. And last year, Shanti decided to make him co-head in January 21 of the 811 business along with Manish. So I'll now have the 3 of them take you through the presentation. And thereafter, of course, we are very happy to discuss the matters. There are many parts of the presentation which would be relevant, certainly in the Kotak and 811 context. But there are some things which also give you a trend of shape of things to come, how an industry moves from the world of horses to the world of electric cars. Thank you very much and look forward to engaging afternoon.
I'll just keep this mic next to you, Mr. Kotak. Thank you, Mr. Kotak. Horses and cars, we'll keep that in mind. We will now hear from 3 eminent speakers, like Mr. Kotak said, all 3 from Kotak 811. Allow me to introduce all of them. Our first speaker, Shanti Ekambram, President, Consumer Banking, Kotak Mahindra Bank. Shanti is part of the Group Management Council that drives and oversees the Kotak Mahindra Group's growth charter. Shanti has been associated with the group for over 30 years now and has been responsible for successfully setting up and running several business units. Both Business Today and Fortune India have listed Shanti Ekambram as amongst the most powerful women in Indian business. Shanti, we're happy to have you on stage with us. Our second speaker today will be Manish Agarwal. He's the business head of Kotak 811. Manish is a performance-driven professional with 25 years of experience in the fields of IT and finance. Manish's expertise lies in the area of setting up digital marketing and innovation units and assuming P&L responsibilities. Our third speaker is Uday Kotak, co-head at 811, Kotak 811. Jay has an MBA from Harvard Business School and a BA in history from Columbia University. Prior to Kotak, Jay has worked at McKinsey and Goldman Sachs. Jay, welcome on stage. May I now invite Shanti to address the audience. Shanti, the stage is all yours.
Thank you, Suresh. Hello, friends. Thank you very much for being with us today as we share details of 811 and our journey over the last 5 years. I want to emphasize at this stage that this presentation is only about 811 and not about other parts or products of Kotak Bank, its digital platforms or technology stack. This is only about 811, which we launched about 5 years ago. And a lot of you have from time to time asked questions. So like Uday said, 5 years later, we're here to share some of the snippets with you. We launched in March 2017 as India's first downloadable savings account, where you could open an account under 3 minutes. When we launched, we had no idea how 811 would evolve or grow. In fact, it was like jumping off a cliff with a belief. But the very first month surprised us with the numbers, and we had to quickly add capacity. It was fascinating to see customers from different parts of the country open accounts and different genres of customers, which they also alluded to. When we launched, we committed to everyone that we would double our customer base in 18 months. And guess what? We did achieve it. The first 3 years were spent fine-tuning the entire acquisition engine. There were a lot of changing regulations, but there was enough and more work to be done to make it efficient and a great experience for the customers. We could have grown it faster, but we wanted to ensure that this was meaningful and profitable. We also wanted to get our data science, technology, and product stack in place that would help us grow exponentially, both on numbers as well as engagement with the customers. As we started the beginnings of the cross-sell in 2019, we realized the power of the base. We saw very different behaviors and characteristics of the customers who were coming in and looking at what they would do and what they would not do. And then COVID hit us. That's when 811 became even more valuable and set us thinking as to what do we do with this large base of millennials and multifarious customers. And thus, in January 2021, we decided to change course and really look at 811 morphing into a full-service digital bank, focusing on the customer, what the customer wants, and doing what it takes to make them happy. The opportunity is immense. We have begun this journey of change, and we will take you through the details. I'd like to start with an audiovisual.
Change, a phenomenon that sustains and disrupts life as we know it. It can inspire and unite millions to bring movement in the face of stagnation. In India, 8 November 2016 would go down in history as the day that slingshot 1.3 billion people to a cashless economy. The announcement of demonetization meant the dawn of a new era, with Aadhaar giving every Indian a unique identity and UPI making way for faster and easier payments. It was time to take digital banking to the next level. Kotak811, stepping in with its signature welcome of India Invited, brought a full-fledged bank to the house of every Indian customer digitally, helping millions open their Khwabo ka khata with its 3-minute account opening journey and an AI-enriched mobile banking app. In 2020, when the world fought the COVID-19 pandemic, Kotak811 stood at the forefront of innovation and launched India's first video KYC process to open a bank account, helping people start banking from the comfort of their homes. At Kotak811, the code is to embrace change and innovate undaunted to build a tech-enabled, future-proof banking ecosystem that's accessible to every customer, no matter where they are, today, tomorrow, or in the far future.
So let's begin with the first chapter. Actually, 811 story is really India growth story and the India stack story. 750 million smartphone users. Identity for every Indian through Aadhaar. Democratization of payments through the UPI platform with now transactions touching 5 billion. Demographics, young India, 52% below the age of 30. And digital adoption, which just picked up exponentially thanks to COVID. This is the real India story and India stack for 811. So we crafted a vision, which is basically to say, empower every Indian to access customized and bespoke financial products delivered digitally with a world-class service experience, and we started the mission. Like I said earlier, 17 to 20, we focused on fine-tuning and really becoming efficient in our digital acquisition engine with the beginnings of the cross-sell. In 2021, we decided to move to a semi-autonomous unit focused on exponential growth as a digital bank. Kotak 811 is in a unique position, and you might ask why. Because it is on the Kotak banking platform, which has trust, brand, the platform, distribution, and technology. While Kotak 811 is agile, nimble, digital first, and ambitious. So a very powerful and potent combination. The bank empowers 811 through its branches, its products, its risk management, talent management, amongst others. And 811 focuses on the core product, data science, technology, process, sales, and customer service. I will now request Jay to take you deeper into the 811 story. Jay?
Thank you, Shanti. It is my pleasure to be here with all of you. Good evening to everybody in person and online. The quote on the slide we see here is from my professor, Clay Christensen, at Harvard Business School. Clay taught a course that's focused on innovation and disruption. His central thesis was that incumbent large firms slow down a little as they get larger and become suspect to disruption by newer, agile firms. Clay's solution for this problem is for large incumbent firms to incubate autonomous units within them and be empowered to self-disrupt rather than being disrupted from outside. As Shanti shared, 811 is Kotak's example to try and follow Clay Christensen's theory. Now, I'm going to run you through some numbers for 5 years, zooming into a quarter, and then into a month. In these 5 years, 811 now has 12.3 million full KYC savings accounts. 811 has 5.3 million paid debit card users. An important point to note here is that all of these debit cards are on request. As my father shared earlier, 811 is an unbundled service. Our customers ask us for this product and pay 200 rupees per annum in order to use it. This indicates that they are engaged. We have recently launched a premium version of our paid debit card for 400 rupees. On the screen here, you see two examples of famous Indian IPL teams. We have a large and growing content bank for these image cards. In the last couple of months, we have sold around, in the last 6 months, we have sold around 100,000 of these premium debit cards. What this says is that if you design products for the customer is willing to pay for them. 811 is a pan-national bank. We operate all over India and have customers in over 1,000 cities and towns and 10,000 PIN codes, ever growing. Every 5 seconds, a new 811 account is opened digitally. 811 is an always-on bank. More than half of our accounts are opened outside of banking hours. In fact, since we started this event, we have opened over 1,400 new accounts. That screen there is a rough indicator of new accounts opened by 811 as we go forward. Now, let's look at some numbers for fourth quarter 2022, the most recent quarter. In 4Q22, 811 accounted for the following proportion of Kotak Mahindra Bank by volume. 71% of new full KYC savings accounts, 70% of UPI transactions, and 60% of new credit cards issued. Additionally, 811 accounted for around half of many other metrics by volume. Further, if we compare some of these same metrics to India's largest private sector bank, 811 alone accounted for 52% as many savings accounts opened in the quarter as India's largest private sector bank. 811 alone accounted for 40% as many new credit cards issued as India's largest private sector bank. You would say, volume is easy, but the real juice is in the value. So here, we show you 811 as a percentage of Kotak Bank by value. In fourth quarter 2022, 811 accounted for 29% of the incremental savings account balances as measured by average monthly balance, 58% of UPI transactions by value, and around 32% of personal loans and consumer finance disbursed by value. Additionally, 811 accounted for a third of Kotak Bank by value on some of the other metrics listed below. One of the things that fintechs and new age companies do very well is disbursal of loans. So here, 811 compared to India's largest listed fintech in Q4 of 22 disbursed, or rather our customers were disbursed 71% as many loans by value as India's largest listed fintech. When we look at an engagement metric, debit card spends per debit card, 811 customers spent around 6 times as much as the same fintech that I talked about earlier. So, we're at 1 quarter. Let's zoom in to March 2022. In the month of March, 811 acquired 571,000 new customers and 417,000 new full KYC savings accounts. This translates to a conversion efficiency of over 70%. We are very, very serious about conversion and we focus on this keenly. Around 50% of these savings accounts were converted within 1 month of us acquiring them online, despite the regulatory dispensation allowing us 12 months. Further, 85% of 811 full KYC savings accounts for the month of March were funded. While our proposition is a zero balance proposition, our customers are engaged, as you can see, both from the funding level and also from the fact that they come to do their full KYC quickly. In fact, many times they are calling us, please come and do my full KYC. In March, 811 customers, 116,000 credit cards, 59,000 insurance policies and trading accounts, and 56,000 fresh loans. With that, I'll leave you to Manish Agarwal, my colleague.
Thank you, Jay. Good evening, and good morning, and good afternoon for people who have joined from different time zones. Let's look at who are these 811 customers. She is a home wife, she is a professional, salaried, student, retired, or professional. Of course, all of these customers are 811 customers. If you look at the profile, 56% happen to be under 30. But along with that, every day we acquire around 2,000 customers who are retired housewives. If you look at the occupational diversity, almost 1/3 of these customers are self-employed. While it's a zero balance account, these customers behave exactly like a branch banking customer when it comes to consumption. When we offer deals, we see a huge uplift in the spending to the tune of 15x, and the average ticket size is almost equivalent to a bank customer. As I mentioned, these are consumption-driven customers. They are more of a spender than saver. 50% of this customer have an unsecured asset with Kotak or outside Kotak. When we got deeper into this customer's behavior, preferences, and transaction, we figured it out that these customers like bite-sized product. And accordingly, we created many sachet-sized product. Just to give you an example, we have a micro insurance where the premium is 811 rupees. We have created a secured credit card with a limit of 9,000. This card not only gives them the payment convenience, but also helps them build credit score. And as you see, 47% of the recurring deposit by these customers are less than 500 rupees. So what does it show? 811 customer does small ticket, but large volume transactions. As we see, the customers are millennial and Gen Z. They spend most of their time on mobile. And that's why we have created more than 200 digital services and product offering on our mobile app. And that's why our mobile banking app is rated the best in iOS and among one of the best on Android. Our customer loves doing transactions on our mobile, and that's why they visit mobile banking every alternative day. If you look at the app stickiness, our mobile banking app is almost 30% higher sticky than the average of banking apps. Having seen the profile of this 811 customer, let's look at how are these customers behaving. And to show you, we have taken the customers which we acquired in the first year. We acquired 1.8 million customers. And if we look at after 4 years, 43% of these customers are still active and transacting with the bank. This is in spite of the fact that the first year we had friction in our journey and we haven't actively started engaging with this customer, but still 0.8 million customers are still active and transacting. If we look at the key matrices of this customer, whether it is average monthly balance or the product holding, is much better than the 811 customer base. What we see with time, this customer engagement grows and they start behaving like a full stack service customer. Let's look at some key numbers for 811. These are the numbers which we closely track on a daily basis, or in fact, I should say every hourly basis. The next 3 slides are a little dense, so let me help you to read the number quickly. For the first 4 years, we have shown the monthly average number, while for the last year, we have given you a little more granularity where we have shown monthly average on a quarter-on-quarter basis. The red line depicts the number of customers which we acquire every month. If you look at top right, we acquired 604,000 customers every month in Q4 of financial year 22. The dark line represents the full KYC customer. As Jay mentioned, we are always looking forward to drive efficiencies and take this number higher. If you look at this number, it almost doubled. We did 212,000 customers per month full KYC in financial year 21, which has grown to 416,000 customers being full KYC month on month in Q4. If you analyze this number, you will see that we are acquiring 5 million customers on an annual run rate basis. Let's look at engagement matrices. Because this customer is a zero balance account, we look at first funding very closely. And if you see, the first funding has grown to 430,000 customer funding every month in Q4 of 22. If you look at the numbers, we have grown our acquisition 50% year on year, whereas the funding has grown 80%. The black line represents the debit card, which Jay spoke about. They are all paid and on request. The number has increased 2.5x over the last 1 year. As I mentioned, we have created custom-created products which are sachet-sized, and when we see the number, this number has grown 3x. We did 93,000 units per month in financial year 21, which has now reached 283,000 units being sold every month in Q4 of 22. The dark line represents the asset cross-sell, and this has seen 8x growth over the last financial year. This is of interest to us, and Jay will talk about this number further in detail. So now we see whether it is onboarding matrices, engagement matrices, or the cross-sell. All of them have seen huge upside post we decided to make it a semi-autonomous unit last year. Let's look at saving balances and throughput. As of March 22, the total saving balance in 811 account was 75 billion, and this has grown 57% year on year. If we have to look at the average monthly balance per customer, it was 6,100 rupees. While saving balance is one matrices, we also look at throughput, which is the total debit and credit taking place into an account, which is a matrices of engagement. And if you look at the throughput which happened in the month of March for all 811 customers was 520 billion. If we do the annualized rate for the March number, it would mean that the throughput of 6 trillion rupees taking place in 811 customers account. The growth in throughput is 104% year on year. If we look at this matrices on per customer basis, this has almost doubled over 5 years. It was 22,000 rupees in March 18, which has now gone to 42,000 rupees in March 22. This is despite the fact that we have increased the base over this time period. So what does it signify? Our saving balance has grown 57% year on year. Our throughput has grown 104% year on year. This means that these customers are bringing in more money into the account. They are consuming more. They are doing much more transactions with us. Now I will request Jay to come in and take us with key focus area.
Thank you, Manish. Nice to be back. So if I can summarize in words what Manish just said with a lot of numbers. Till 2020, 811 was largely an acquisition engine focused on acquisition and fulfillment. From 2021 onwards, in line with Clay Christensen's vision, 811 focused deeply on engagement and cross-sell. Let me take you through that journey on engagement. The first product is the credit card. In FY22, 811 customers were sold 736,000 new credit cards, representing a 4.6x growth year on year. 811 co-created the Kotak 811 credit card, specifically tailored to the unique needs of our customers. But credit cards is not just about number of cards issued. There are a variety of other metrics that matter, as you all, I'm sure, know very well. So here, we compare 811 customers to customers of India's leading listed credit card player. When we look at 30-day purchase active, revolve, and asset quality, 811 stands roughly in line with the player I mentioned. When we look at e-commerce penetration, 811 is expectedly a little higher. Spends per card per annum for 811 customers stands at 82,000 rupees, roughly half. An interesting point to note here is that despite the fact that 811 customers keep around 6,000 rupees average saving balance, as Manish mentioned, their annualized spends are up to 82,000 rupees. 811 customers are spenders and consumers. Apart from credit cards, our customers also enjoy a wide variety of other asset products. Here, we show you personal loans and consumer finance units. We sold to our customers around 426,000 units of these, representing a 6.2x growth year on year. I'll take you through the journey of how we went about this asset process. In the last year, we expanded our customer base around 50% and our pre-approved offers base around 4x to 4.3 million, which is now around a third of our customers. Against that, we sold around 1.2 million asset units. And that too represents a tiny fraction of the opportunity. Within 811's own customer base, there are 6 million customers with asset products in the industry. And we believe the credit universe for customers in India is as large as 400 million people. That is why, while we continue to focus on engagement, we must not take our foot off the customer acquisition pedal. Needless to say, along with assets comes risk, and we have to keep a very close eye on that as well. Aside from assets, our customers also want non-asset products sold by the bank and the group. Two of these on screen, insurance policies and trading accounts. We sold 551,000 of these in fiscal 22, representing a roughly 60% growth year on year. Now, many of you will say, this is all great, but do you make money? Let's try and answer that question. When we started in fiscal 18, we saw this as an entrepreneurial risk. We didn't know what was going to happen. Our profit per customer was so much less than our acquisition cost per customer that the break-even was infinite. This, by the way, refers to a per customer break-even. Over the next 4 years, while we kept scaling up, we also kept a close eye on our unit economics and break-even per customer. As you can see, it's fallen from around 9 years in year 2 to 5.2 years in the most recent year. This number continues to fall. In quarter 4 of FY22, the break-even per customer acquired in the quarter was around 4.5 years. Here, let's run you through some details on how we came to that 4.5-year break-even. The total one-time cost of acquiring an 811 customer is around 860 rupees. This includes all fulfillment for full KYC along with performance marketing related costs. On a per customer basis, we earn around 190 rupees a year in net operating income. This represents a 46% growth on the same quarter a year before. Two important points to make. The cost underlying this operating income is all inclusive and includes all allocated costs: physical, digital, marketing, technology, and others. If an 811 customer uses a Kotak Bank branch, a Kotak ATM, or an ATM anywhere else, our P&L is debited a fair transfer price. On cross-sell, 811 only gets a distribution fee, which is part of the revenue underlying the operating income here. Manufacturing revenue sits in other parts of the group and Kotak Bank. Anecdotally, if we look at branch banking customers as acquired using a similar methodology, the break-even is a little over 5 years, which means that 811 customers on a unit economics basis now break even quicker than branch customers, and our break-even continues to fall. Lastly, these break-evens represent interest rates of last year when we calculated them. In a rising interest rate scenario, the break-evens would come down. Now, I will quickly take you through some of our engines that we hold close to grow. Customer obsession, agile technology, and data science. At 811, we are obsessed with our customer. We try to do the best that we can to make their experience better. We've already talked about the instant account in 3 minutes with a video KYC in 5 minutes. A lot of customers are immediately able to use UPI, our vernacular-powered self-help bot, and the entire branch network and services of Kotak Bank. Additionally, we provide our customers with an on-the-fly credit card, which means that when we acquire a new customer, we have the ability, basis a real-time credit decisioning engine, to offer them a credit card right there in the acquisition journey. Technology. At 811, we look at banking with a software engineering lens. We have begun the journey of moving from a vendor-managed and monolith tech stack to a cloud-native modular tech stack. This removes long cycles of development into rapid agile development sprints. This, we think, is very important. In order to serve a customer in the digital world, one must be able to experiment and innovate. If any innovation takes 6 months to flow through your tech stack, you cannot experiment. At 811, we are striving to change this. Data science. Banks are sitting on a wealth of data. The customer layer, the service layer, the platform layer. 24/7, we have millions of little data signals from our branches, from our app, from our WhatsApp bot, from customer transactions, telling us different things about our customers. Previously, they all sat in disparate systems. We have combined them into a cloud-native customer data platform that allows us to analyze transactions real-time, risk profile customers real-time, and offer customers personalized cross-sell products to deepen our engagement with them. The team at 811. 50% of our team are engineers, data scientists, product managers, and designers. Talent is the centerpiece of any future-proof business. Everything revolves around high-quality people to build various layers of our customer stack. Our team is young, under 33 years old on average, one of the younger teams in Indian banking. Let me quickly shout out to the team, some of them sitting at the back. Hi, guys, and some of you on Zoom. Hello. To summarize, Kotak 811 is a full-stack digital bank within Kotak Mahindra Bank. We have over 12 million users, growing at 50% year on year. Our customers are valuable and sticky, resembling to a certain extent full-service branch banking customers. We have technology and data at our core as we rebuild our tech stack layer by layer. And we have strong unit economics compounding at scale with a 4.5-year customer break-even that continues to go down and a steep 5-year learning curve. So, here on the screen, I started with a quote and I'll end with one. This is from Michael Jordan, one of my favorite basketball players. It hung up on my bedroom wall when I was a child, and I take it close to heart. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Just like Michael Jordan, 811 started in 2017 not fearing failure. We will go ahead in the same spirit. Kotak 811, digital banking for 1 billion Indians. Thank you.
Thank you, Shanti. Thank you, Manish. Thank you, Jay. It's now time for a Q&A session. And we have questions both from people who are asking us, who are joining us virtually, as well as people in the room. I request you to take seats on center stage, Manish, Jay, and Shanti. A quick reminder for those of you who are using the video conferencing app, type in your question in the Q&A function. For those of you who are with us in this hall, raise your hands. We'll send a mic to you. Quick reminder once again, try and keep your questions related to the 811 business. So if you're ready to take questions, I'm going to open the floor to the audience. Ladies and gentlemen, questions. Do remember we have bright light shining on us. You might have to wave a little bit and raise your hands. Yes, we have a raised hand right in the back. Can we get a mic to the gentleman in the back? Yeah, we may want a little light in the hall if you can manage that at the console.
Hi. Thanks for this event. Very enlightening. And very nice quotes as well, Jay.
I don't see you, can I?
Yeah, you can't see me because I am in the end.
Last
the backbencher.
Can we request you to stand up, sir? So
Yeah,
he can see you.
can.
Sorry about that.
No worries. Yeah, thanks. So the first question actually would be, how do you contrast the 811 success with the physical or whatever you want to call it, the alternate reality within the bank in terms of throughputs, cross-sell or acquisition, etc. Whatever you want to share. Thank you.
I'll answer the first part, and then I will sort of take to Jay at least as far and Manish on the learnings on the 811 part. You know, we started out by saying different courses for different horses, or different horses and different courses. Each customer type is different. If you remember how we started out as Kotak Bank, really serving the mass affluent, the HNI, and the larger customers. And as we went by, we sort of, expanded our customer base. The real world customer is very much also changing, just like 811 customers. In fact, I had mentioned in the fourth quarter analyst review that almost 97% of the transactions by volume in the savings account are moving out of the branch and into digital and non-branch mode. So I think from the physical world, we serve what the customers want. Some of the values may be larger, some of the product needs may be different. This is a highly consuming class, that is a saving and investment class as well. They are also consuming class. But we design and co-create products for the different customer segments. They are as valuable and growing as we see them. Over a period of time, so they are acquired physically, they go to digital. We are acquired digitally, 811, they also go to the branch. So we ultimately leave it to the customer, and we create products and services and an experience that the customer wants.
Okay, I hope that answers your question. Anything to add?
No, I think that answers the question. To some extent, what Dad said about horses and cars remains relevant. The horses are very, very relevant today. I don't think we're in 1930. I think maybe we're in 1905. The speed of change may be a little quicker, but it's not fair to say that only 811 is growing. The rest of Kotak customers are also growing.
Okay, any more questions from the audience? Yes. Could I request you to stand up again, sir, so we can see you a little more clearly? Thank you.
Yeah, hi. You have any data on how many other bank accounts would the 12.3 million number be having?
Jack, you want to take
No,
that?
you mean how
How many more bank accounts do they have along with 811?
No, we do not have that data.
Okay.
Unless
What
we track it.
percentage would be first bank? No, we don't really get into how many bank accounts they have, right? It is possible that a lot of them have bank accounts. There may be some who are the first bank account, but we don't have that data.
But having said that, we measure engagement very closely. We want to be the primary bank for all 12 million of our customers. We're probably not for all of them. By looking at data, you get a reasonable sense of whether a customer is using you for a certain set of services or for their core services. And we are very clear, we want to do more there.
Quick reminder for those of you attending on video conferencing, do send us your questions using the Q&A app, and I'll pose the online questions as well. Yes, sir. Go ahead.
Yeah, hi. I think interesting journey that you all shared on 811. Two questions on the engagement side. When you look at the other segment of players, fintechs, banks, etc., what you've seen, UPI becomes the core engagement product, and then they get converted into. Can you just talk about, apart from savings bank, what you all are doing on that front? Number one. Number two, Kotak traditionally has had a very strong base of customers on the commercial retail side, the the earning customers, etc. Any plans of taking 811 to those customers too on the lending side? Thank you.
Yeah, you want to answer the 811 part first?
Sure. Yes, UPI is something that is revolutionized India in the last couple of years. We take it very seriously. One of the things that we look at is how can we get more of our customers to transact on UPI through our own interfaces. We're working on it. We have a Kotak 811 app, a light app that we're building that has the singular focus on onboarding and payments. So hopefully you'll hear from us on that. But
I'll just add to what Jay said. See, UPI is typified by smaller value but large volumes. If you saw what we talked about the 811 customer, right? They really represent small ticket but large value, right? So our customers automatically took to UPI. Yeah. If you look at the larger payment system, people are adapting, but IMPS, RTGS, NEFT by value is still the largest, right? So for us, UPI for our customers and for all the bank customers are important, but 811 has adapted and adopted to it very fast. It's not that we don't have other customers in the bank, but it's small ticket, large volume. And that's really how 811 is also depicted. On the second question, I think we have spent a lot of time in the 5 years, a steep learning curve on the genre of customers, young demographic. We have a lot of plans. We are looking at the small business customer as yet, but we will share with you whenever we come with the plans.
Thank you, Shanti. We have a question from our online audience. I'm going to read out the question for the benefit of the audience. And Umang Shah from Arohi Asset Management asks, how do we think about underwriting and risk management when it comes to underwriting NTB customers for asset cross-sell, especially when they haven't parked substantial savings with us?
Yeah, I'll answer that question. So that's where our data science and deep analytics really comes into play. If you look at a customer who does not have a credit history, we take a lot of the alternate data, whether it's their UPI payment data, whether it's the utility bill that they pay, right? Whether it is, the kind of debit card spends that they do. So we look at all the transaction data, we look at the profiling, and we get into use data science to really qualify customers. And that is how we decide the underwriting and the risk. Also, we start from a smaller ticket base. And as we get the experience, we grow the risk. We also talked about a product that we have that is a secured credit card, which helps us analyze the customer transactions and then grow them into the unsecured part as well.
Thank you, Shanti. The next question also comes from a member of the online audience. I'll come back to the physical audience shortly. What's the most significant spend area of the spender with such little savings that they spend 13x their deposits? And what's the average age of this spender? What are they spending on?
Okay. Young people don't like to keep money in their savings bank account. Part of the reason is that young people don't have money to save. There's plenty of things that we've seen around the world of how our generation, relative to the generations before us at this same time, has far less disposable savings. But if you look at throughput, which is it comes in and goes out, these customers are spending money. So I don't think it's fair to characterize them as, oh, they're just leveraging or they have less balance. It's just that it comes in and it goes out.
And there's a follow-up question, and what's the comfort in being a lender to such a spender? A bit of a poetic question, I guess.
Yeah, but I'll just answer that. We started out by saying 811 is not just a lender. We start with banking, we start with transactions, we start with engagement. So as it is not the only product, the throughput and the volume of the transaction gives us comfort of being a lender to customers. And remember, customers when they are young start out as spenders, then they make money, they become savers and they become investors. That is the cycle, so that's a virtuous cycle. But it's really banking, throughput, alternate data that gives us comfort for being a lender to such customers.
All right, back to members of the audience who are physically here with us. Yes, sir, go ahead. Once again, can I request you to stand up, sir, because the lights are very bright on us. We can't see you very clearly.
Sure. Thank you for the presentation. First question, you said that 811 is now a semi-autonomous unit. Something changed last year. Could you explain what exactly changed and how does 811 sit with the entire digital banking offering that Kotak has?
Sorry, what was the question? That's what we said.
Yeah, so 811, when you say it's a semi-autonomous unit, what exactly does it mean? And how does it sit with the rest of the digital offering which the bank would be working on?
Okay, so I'll give you 3 pointers. The digital platform of the bank, which is mobile app and net banking, is common. But when you get into the mobile app, the journeys, the landing page, the customizations thereafter belong to the 811 team. Okay? The product that the bank has, say credit cards, right, is the bank's product. But 811 team co-creates a product respectively necessary for this customer. Yeah, Manish talked about the fact that we have a small size card, we have a small size insurance product, right? The technology, the data platform that 811 has, right, is different. They have created their own cloud native data platform for looking at how they serve their customers real time. So bank has products, 811 team leverages that to co-create the product. I talked about the fact that the bank empowers 811 through branches, operations, risk management, products, etc. And 811 manages the customers, the data, the technology, the process, and the whole co-creation.
And the all 12 million odd accounts, are these customer owned journeys or do they include assisted account opening journeys as well?
They are all customer owned journeys. The customer is onboarded with either an OTP account or a wallet account within 3 minutes online, and then pursuant to the relevant regulations of both those instruments, the customer can begin transacting. Then we complete the customer's KYC either through the physical or through video KYC. That part has some degree of assistance for the physical, but the online acquisition journey works without any assistance. There is no call center that close loops it. The customer opens the account on his or her own time.
Sure. Thank you.
2,586 accounts since this event started have been opened.
That is a rough number.
Your question. Yes, sir.
Approximately.
Yeah.
There's someone there already.
Yeah, we'll come to the back of the hall if we can get the gentleman in the second table. Oh, you already have the mic. Okay, go ahead. We'll come to you.
So a couple of questions. So probably both of them tying together.
Can I request you to hold up the mic a bit?
Yeah. So probably both of them tying together. So the first question would be, you shared a slide on the break-even period. So I just wanted to sort of understand what would you believe would be the LTV to CAC ratio for that? I mean, what I mean is you talked about the break-even period. So what do you believe would an 811 customer would in his lifetime be able to provide in terms of revenue if his fixed cost of acquisition is, say, 860 as a share?
So our acquisition cost is, sorry, your second question. My apologies.
Right. So second question probably ties in with this. 5 years back, 811 made a lot of strategic sense for Kotak, I believe, to gain market share, to sort of launch a live wherein they could gain market share on the liabilities front and acquire as many customers as possible. Now you mentioned that the outlook has sort of changed to a greater focus on cross-sell, right? So I wanted to understand, so with a new set of customers or with a change in outlook, do you see any change or do you see any change warranted in the business model for a digital bank of sorts? So what I mean is, traditionally for a bank, the net interest income has been around 60-70% of the net revenues. Do you see that changing with a new sort of a product or new sort of a model? So those are my two questions. Thanks.
I'll answer the second question first. Ajay, you can answer the first question, or Mani, right? We still acquire 811 as a banking customer. 56% of them are below 30. The profile of the customer is such, while they do banking, they do a lot of consumption. We do have customers who are retired, who are in their 40s, 50s also. Our core still remains, it's on a banking platform and all around banking and engagement, not just cross-sell of assets. I want to re-emphasize that. Yeah? These customers, as Manish said, a customer acquired in 2017, when we did not have great engagement metrics, today has an average of 20,000 rupees. We have seen students, right, who have 3x these balances, who started out as students, now have started earning. So our idea is to grow the lifetime value of the customer, right? And that includes liabilities, assets, products, etc., as we grow with the life cycle of the customer.
The question.
Yeah, you just need to hold the mic up a bit.
Yeah. So what I was trying to understand was, so that I understand that the banking business remains the same. I mean, they're banking customers and they are allowed, all the different products are allowed on their platform. What I wanted to understand was, do you see the business model changing? I mean, what I mean is, till now, banking has been dominated by mostly net interest income, but there are a lot of challenger banks across the world who have sort of tweaked the business model wherein their main source of revenue is not NII as of now. So do you see that changing? I mean, I'm just asking for your views on, do you see this changing?
So we are evolving and learning. Uday started out by saying that these are unbundled propositions, which means the customer pays, pay and use the service. We have seen the customer willing to pay if we order products, offer products and services that they like and design for that. I think we are still young in the journey. We see customers consuming and willing to pay, but I also see the throughput and the way they are growing. So we'll wait and see how it goes from here. But we have to watch how it evolves. Last 5 years was a learning. We'll see how it goes in future.
But if your question was, have we changed our strategy from acquisition to engagement? It's not either. We continue to ramp up our acquisition. Along with that, we have taken it to engage and do higher cross-sell with this customer base.
And yes, 811 does have some revenue lines that some other banks may not, like debit cards. And yes, relative to other banks, as I talked about, because our savings balance per customer is lower, our net interest income as a share of total may be slightly different, but I don't think it means that the fundamental business of banking has changed. It's just a slight change in the mix.
And exponential acquisition continues to remain a focus.
And your second question was on?
I answered that.
Okay.
Yeah.
Okay, the gentleman here who had his hand up. Yeah. Can we get a mic? Can you put your hand up again, sir? Mic here, please. Yeah. It's coming to you.
Thank you. I just wanted to understand a bit more your acquisition engine. What are the key channels and how has it changed over the last 5 years? And more importantly, since you showed a slide versus the biggest retail bank in India, how does this compare with the typical corporate salary account customers? What is the difference in profile and economics? For some color on that would be great. Thank you.
Maybe Manish take the acquisition.
Yeah, so you talked about the channel of acquisition. As we mentioned, all these customers are customer-initiated acquisition. We use digital channel primarily, which would mean Google, Facebook, partners who are driving it. So I don't foresee any change in the channel composition. What we have added over a period of time are the acquisition which are coming through member get member, referral, which is driving number of customer acquisition. So, but we haven't seen any drastic change in our channel,
I'll just add to that. When we started performance marketing, as it's called, was our key channel for acquisition. Over a period of time, we have moved to organic, direct marketing as well as acquiring customers. Today, I think more than 23% is organic acquisition. We are now working on partnership alliances and a larger base of seeing how we can increase some of these organic as well as partnership acquisitions. But even today, about 70% still remains performance marketing. We're looking at how we can change that over a period of time.
Okay.
Sorry, 70% remains performance
marketing, yeah, which is through digital channels.
Okay.
Yeah.
Digital
marketing, yeah.
You gave some numbers on the demographic profile in terms of age, but in terms of geographical mix and again of overlap with your branches, how much different or overlap there is with your branch?
So rough numbers, rough approximate numbers. I think top 10 cities would account for maybe 40-45% of our customers. The balance are dispersed really a lot. Selection of PIN codes is to ensure that it is within 50-kilometer radius of the branches, right? So that a customer can be served. So you saw that we are 10,000 PIN codes and growing, right? And we opened up PIN codes to make sure we could serve the customers. We're now developing alternate models of servicing, which we are beginning to work on, to see how we can serve customers, say, 200 kilometers or so. I hope that answered your question.
I think the idea is to be pan-national. One of the companies that we take inspiration from a lot is Nubank in Brazil, which has a motto that we operate in every single PIN code, and they have no branches. So we need to work towards delinking from the physical network, but we acknowledge that that network is important. And going super far away without thinking it through may not be wise till you've thought out how you are going to serve that customer.
Okay, next question from the online. Oh, sorry.
My second question on the profile and difference in economics between an 811 customer and a typical corporate salary account customer.
So we presented the economics of an 811 customer, right? If you look at a salaried customer, there may be slightly, we don't sort of share the differential between a salaried customer and an 811 customer. We've in fact not shared unit economics on our other customer base as well. But it would probably be better. No.
And also salaried customer, there are so many channels by which they acquire. The physical channel by which you acquire a salaried customer where your sales executive goes to the large company and acquires a few accounts every day. That's an expensive channel. Scale acquisition that happens where you go to the cafeteria and you have 500 accounts on new acquisition day. So how to compare? It's different. Hence, we gave the blended average of branch banking customers.
Sure. So that was the idea of the question. The lifetime value over the acquisition cost for 811, do you think it's better than the...
See, you must remember, branch banking has physical infrastructure costs. They're two different models. Ultimately, it is up to the customer. The 811 customer comes to our branch to get serviced. A lot of our 811 customer goes to the branches, which is there in the unit economics. But you need to set up that infrastructure.
Having said that, we're very happy with our lifetime value to acquisition, unit economics, and we feel good about it.
Okay, I'm just going to go to the online audience for a couple of questions. We have Linda Mattison of Invesco Oppenheimer from New York, who says, you mentioned about 40% of our customers stayed with 811 over the 5-year period, I presume. Amongst those lost, what is the split between active dropouts versus those who were pushed out?
So first and foremost, we don't push out customers unless we have to freeze accounts for regulatory reasons, right? Either due to any suspicious transaction or otherwise, we don't push out customers, right? They remain customers. They either become dormant, like Manish said. In the very first year, we were so focused on acquisition, our engagement started only 2 years later, right? So many customers would have become dormant. And in fact, we are now activating our entire base to see how we can activate those customers. Yeah. So except for regulatory reasons, we don't freeze or push out customers. Credit cards and loans, very similar. Credit cards are in line with the industry. Yeah. And loans, depending upon the size and the rating of the customer, it is like our regular loans, we charge interest. What are the interest rates charged? Credit card are standard rate charges across. And loans depends on the size, the profile, and the rating of the customer.
Okay, the next question again comes from our virtual audience. Does the break-even of 4.5 years include the risk to the BS exposure of such lending?
So as Jay said, that 811 gets only distribution income, right? The income and the exposure is with the product team, but we also showed that our delinquency is at about 1%, which we monitor very closely.
Next question from Dhaval Gada of DSP Mutual Fund. If you look at credit card originations and asset product originations for 811 customers, it seems that FY22 was the first big year. The question he asks is why the delay in offering pre-approved products and what percentage of asset product originations in FY22 were from the 2017-18 customer cohort?
So a lot of you may remember that we had 2 years of COVID, right? When there were huge delinquencies, market was going through a churn in the credit cycle, right? Just prior to 22. So from 20 and a year before 20, you saw the economy slowing down. Actually, if you look at the unsecured retail business, you had almost 2-3 years of slowdown. But post-COVID, we saw a great opportunity, which I think we have been talking about in our analyst calls. So I'm not going to repeat the same. And that's when we looked at the entire base, not just 811, to grow our unsecured retail business. And 811 particularly, we saw the opportunity from 21 when we decided to get into a deep engagement. So it's a cycle and it's the timing.
We have time, I think, for one more question in the room and one more question online from what I understand. Yes, sir, go ahead. Keep your question brief if you can.
Yeah. Hi. Couple of questions. One is when we look at the engagement levels, right, on a banking app versus any other fintech apps, what are your learnings? Why is the engagement levels or time spent on the app lower, like meaningfully lower than on a fintech app, right? UPI is one of the reasons, but any learnings out of the last 5 years? How do we increase engagement? Second question is on the 850 rupee that cost that we have on the customer. How much is acquisition? How much would be needed to spend for him to be engaged on the app or with us? So how do we think about cost on engaging the customer? Thanks.
So sorry, what was your first question again?
First question was when we see the time spent on the app, right?
Yeah.
Like a 811 or any banking app versus any fintech apps.
There are two answers to this. First, it comes to technology and product design. Fintech apps, particularly the big tech apps, are designed by best-in-class product engineers with extremely competent tech stacks, which have very little reaction time, smooth animations, and great UI UX, which keeps customers engaged. But I think the bigger thing is freebies. If we offered our customers a large amount of cashbacks and discounts, I'm sure we could drive a lot of engagement as well. But what we're looking for is sustainable engagement. We're less concerned about, while it is not a metric we ignore, we're less concerned about how many minutes you spend on the app than it is, are you transacting, are you engaged, are you our customer really, and do we have a relationship that makes sense for both of us?
And the cost angle, like how much do we need to spend to keep the customer engaged?
All our spend question. Go ahead.
So normally we look at it as one cost of acquisition, right? Which includes both the marketing and the fulfillment cost. Yeah, and we try to make sure that both are optimized, right? So we look at it as one-time acquisition cost. There is a servicing cost that we have, which is there in the operating cost, which includes some of the engagement costs as well. Yeah, that's separate. So this is acquisition cost, which is our marketing fulfillment cost for acquiring a customer, including calling a customer, etc. But we tack it as one metric.
And one last question is on the partly answered it. 12.3 million customers. You said 40-45% are top 8-10 cities, and the remaining are like maybe tier 2, tier 3 cities. So, any color, any further breakup on how to understand this, because we are a more metro-centric bank, right? In some sense. So we're already dealing with these customers in our branches. This is another platform that we are engaging them. Any color on how do we get more deeper into the country with this proposition? What are the ways we are doing it?
So 1,000 cities and towns, right, is served by itself where our customers reside. And in fact, we have been following them to see how we can serve them even without a branch. I talked about that, including BCs, micro ATMs, other models, etc. Yeah, 40%, 40 to 45% is still in top 10 cities. And if you take the next 30, 40 cities, we are present 1,700 branches in all the right places. Yeah. So for us, It is about following your customer, these 811 customer, and doing what it takes to serve them. So we are constantly looking out, but today we are able to serve them because our PIN codes are selected within 50 to 100 kilometers maximum of our branch radius.
Thank you.
All right, I'm afraid we have to end the Q&A session at this point. Shanti, may I request you to say a few words to conclude this 811 Investor Meet? Over to you.
So I just wanted to say thank you to everybody for being here physically and digitally, for listening to us actively, for engaging and asking us questions. It's been a great 5-year journey, a large learning curve, but we think the size of the opportunity is immense, and we will strive, as Jay said, again and again and again, and hoping we will succeed. Thank you very much. Please join us for tea.
Thank you, ladies and gentlemen. That brings us to the end of this investor meeting for Kotak 811. Like Shanti said, please do join us for high tea. Thank you all.